So Wei, it seems Asian investors are going crazy for hybrid debt. What's going on?
Well, lots of money slushing around in Asia, but not enough good investment opportunities. And these high yields pay slightly more than a normal plain vanilla bonds. So that's why the Asian investors are quite attracted to them.
Okay, so they're buying lots of these issues, 60% of issues, it seems, in some cases. But what are they doing to juice up the returns?
Well, what they're doing is they're using leverage. So it's quite common to borrow 50% of it. So take a bond that pays 5% coupon. If you are able to borrow half of it and interest rate 2%, then your real return for the year is actually 9%. That's not bad.
Yeah, it sounds pretty good, 9%. I'll have some of that. But we all know there's no such thing as a free lunch. So what are the risks?
Exactly. Well, the interest rate is really the biggest risk because we are at a record low interest rate environment. As interest rates go up, bond prices will have to fall. The hope from investors is, well, these bonds are callable, and there is incentive for the issuers to call them in a few years. So when that happens, maybe the coupon rates will be reset to a higher level. But I think that's mostly wishful thinking because when interest rates really go up, there is less incentive for the issuers to call and pay a higher rate.
Right. And of course, this is subordinated debt. It's risky. What happens if these companies default?
Yeah, when it defaults, it really a big difference in terms of how much they can actually recover. So if it's a senior debt, people usually get to recover 40% of it. If it's subordinated debt, they get less than 10%. So that's close to nothing, really.
Close to nothing. And if you've borrowed half the money to buy the investment up front, then actually you're sitting on a big loss.
Absolutely. In good times, leverage will amplify your return. In bad times, it actually make the loss even wider.
Yeah. So basically what we're saying here is there's no such thing as a kind of a juiced up return without the risks on the other side.
Yes. And the Asian investors look quite exposed to that.
Why do you think Asian investors are particularly keen on this?
Well, one is there are lots of money, Asian billionaires.
But there's lots of money everywhere. I mean, everybody's looking for yield.
Yeah, but I think Asian investors are more used to the growth story here, so they are more willing to take risks. Also, they are also quite new to this more complex investments. Securities. So that's why I think they are actually a bit less sophisticated about them.
Okay, so you think this is a boom that may have an unhappy ending?
Yes, absolutely.
Well, we will have to wait and see, but at least people who've been watching will consider themselves properly warned.